Hello and welcome to Leaders of Tomorrow, India's only platform for MSMEs. We take queries across MSMEs, across industries. If you have any questions for us, you can always get in touch with us. At the end of the show, we'll tell you how you too can reach us. Tonight, 1.5 hour of experts answering your questions. Do stay tuned. Tonight on the show, we have Vikram Gupta. He's the founder and managing partner at IvyCap Ventures. We also have Prakash Agarwal, founder and CEO of Virtual CFO. Both these experts answering all your questions sent to us. Do take a look. Gentlemen, thank you very much for being here tonight. Such a pleasure having you. Thanks for coming on the show, debuting here on the Leaders of Tomorrow. Let's kick tonight's show off with a call that's coming to us. This one's coming to us from the line of Hemant Khandparkar. Go ahead, Hemant. What's your question for our experts?
This is Hemant Khandparkar. I'm the co-founder of Augie Solutions, an IT services company. And here is my question. On one hand, the banks have disbursed in excess of 2 lakh crore worth of loans to large borrowers who are now defaulters. And on the other hand, SMEs have genuine working capital needs and are denied small loans by the very same banks and really suffer for want of small funding, for which short-term borrowing are much smaller in terms of amounts. How do we propose to address this issue for SMEs?
So this is an issue, of course, that's been plaguing the Indian banking system for a while now, and that is having an impact on smaller businesses because banks were, shying away from lending. NPAs were at 10-year highs. But his question is more in terms of possibly what processes could be set in place. Possibly not the best question to be posing to, non-bankers, but do you think that things have started improving on the ground when it comes to banks and the way or VCs like yourself or private equities looking at small businesses and saying the issues that were there in the past have possibly settled, things are now moving forward?
Obviously, when cases like these happen, it does have a ripple down effect on the other people as well. It actually helps the overall system. Actually, if you look at the bigger picture actually leads to improvement in the overall system. Of course, the startups or the MSMEs, obviously, have a bigger challenge because they are looking for only very small amounts, and when they are looked at with the scanner, on these things, and obviously they get hit as well. So I would say that this is something hopefully will get resolved over time, and the banking system currently, the good thing is that's it's improving because many banks have cleaned up their balance sheets and now are looking at this entire, especially MSME lending, in a much more positive way. So hopefully the systems will improve. Majority of the assessment at this stage happens primarily on the person or the people involved. So effectively it's your background, it's your past track record, and of course the nature of the business as well, and your cash flows that you can generate from the business. So I would say as long as you are doing the right things, you would still be able to manage what you're looking for.
Okay.
So you just have to approach the right institutions for that. Okay,
so you're saying don't get thrown off by what's happening in the economy, in the industry so much.
Right.
Okay, would you agree?
Yes, I would agree. There are multiple options. For example, there's a CGT SME schemes which give you loan up to 1 crore rupee. So you need not to get disheartened for 15 to 20. It's gone up to 2 crore now. Yeah. Second thing, what you could do is you can run your business a little more profitably initially rather than going behind top line, and that profit margin will work as your own fund. Run your vendor terms in a different manner so that initially some funding can be available.
Sure.
And the last one but not the least, make your next 6-month cash flow. So you know well in advance where you are headed, where you need to take a right turn, when you need to take a left turn. So plan your finances in advance.
All right. Hemant, that's in response to your question. Trust that answers, the question that you've called in with tonight. Of course, there's a lot that's happening in the industry, but our experts are advising you put your own books in order and also ensure that you're approaching the right people when it comes to funding. Let's quickly move on to our next question, and this is a query that's coming to us on our Facebook page, Leaders of Tomorrow Niti Now, is where you too can leave your questions for our experts. Niranjan has sent us this question on our Facebook page to say Sumitra Computers is one of the leading suppliers and authorized dealers of computers and computer equipment. His question tonight for our experts. He says he's facing major problems as far as receivables from his clients are concerned. He says even after giving them a window of 30 days, he says they don't pay on time. His question for our experts, what would you advise?
I think this is a very genuine issue, and this is a across the industry issue, and especially, you know, early stage or smaller companies have a bigger issue, because, you know, if their working capital is stuck, I think the bigger issue is that, you know, they're not able to then, run their business. So typically when, you know, I am doing my planning at an early stage business or a small business, I always factor that in, that this will happen. So even if, you know, the payment terms say that 30 days, you know, I will factor in saying that maybe it might take up to 60 days, and accordingly plan my cash flows. So therefore, when you are making a business plan or your plan for the next 6 months to 12 months, you'll factor your cash flows accordingly. Especially if you're dealing with B2B clients, if you're dealing with larger corporates or, you know, companies, you know, which are used to paying cash or, you know, pay your bills maybe 45 days to 60 days. So it becomes a challenge, but as long as you've planned it well, I think you will be all right. So it's a matter of planning.
Vikram, there's also now legal protection available to small companies.
That is correct.
I know a small business may not want to take legal action against its larger vendors, but there is recourse available.
You're absolutely right. So that's the reason, you know, even if contractually, because typically the agreements are driven by your customers, so the contract may not necessarily say that, you know, you will take a legal action, but there is a legal recourse available. But I guess you want to do that only if it goes beyond a certain limit. So you don't want to really threaten your clients, you know, just after 30 or 45 days or even 60 days. I think typically you may want to do it, let's say if there are 1 or 2 customers which are really not good and not paying. So there you have an option to go to legal as well.
Okay, so Vikram is suggesting keep a buffer in terms of your finances. What would you recommend then, Prakash?
So I would agree with Vikram, and I would say legal should be exercised only if 180 days have passed and the other person is not paying. There's one more thing which I would add. A lot of these big players have their processes set. And what most small companies expect is they have sent the bill and the payment will come. What they need to do is, when they start the work, they need to check in advance what is the process. For example, there is a vendor registration process which can take a couple of days to a couple of weeks. Finish that all in advance. That will reduce your average receivable days. Similarly, know who are the right people who will process the invoice. Who is the person approving, who is the person actually paying. Knowing them well in advance and taking their number and email IDs can also improve your entire AR cycle. These are the 2 things which are in your hand.
Okay.
Rest I think Vikram handled very well.
Sure. Niranjan, that's in response to your question. Thanks for sending us that query. Let's take in our next question, and this is also a call that's coming to us from the line of R. Venkatesh. Venkatesh, what's your question for our experts tonight?
My name is Venkatesh and I'm the CEO of Datasol Innovative Lab. We are a company involved in the manufacture of avionics and military systems, and we've been in this industry for the last 15 years. We design products for aircraft and helicopter programs of the military applications within the country, which calls at least for about 2 to 3 years of time and money to develop a single product for an aircraft, since the qualification and the testing requirements are very stringent. What we find is, even after putting in so much of effort, after about 3-4 years, we do not get sufficient quantities of production orders which will make us to invest in this kind of a business. Efforts are not commensurate with the returns from the industry as such.
All right, so this is a genuine concern, and even as the government is talking of the offset policy, wants more Indian domestic companies to be able to handle the kind of global orders that we're seeing as far as the defense and the aviation space is concerned. Venkatesh is saying that there aren't enough manufacturers who are here in this space in India, but I also then want to extend it to talk to both of you gentlemen about financing which is available to industries like this. We don't very often hear from MSMEs who are in sectors like avionics, defense manufacturing, etc. And possibly what your suggestion, would you look favorably at a company like this, because the ROI is not something that you're going to see necessarily maybe in a couple of months or even in a year's time. It will take time. So how does someone in this industry perhaps then maybe raise funds? Would you look at an industry like this?
If you're really good at what you're doing and if you really have differentiated products, the contracts that you would get would be long term. So which means that, in a way your value is secured for a much longer period of time. On the other side, if you're not very well differentiated or your products are, you're not innovating on a regular basis, then there's a chance of going obsolete in a very short period of time. The other problem that people might face is because there's so much dependence on a specific sector and the government. Anything goes wrong there, you could lose your customers, and even the payments etc. might be an issue. So there's a working capital issue. So therefore, the way to address this, one is look for diversifying your risk, look for adding more products in your kitty, and see if you could actually look at other segments, because there could be some private customers as well who may have demand for what you're doing, and therefore whatever technology that you have, try to use that technology to add more products which can diversify your risk, go to your private customers as well. I think innovation is very important in this sector. Technology is changing very fast, so one has to keep thinking how to really keep pace with the changing technologies. So that's my advice.
Okay, and you would look favorably at an industry like this if they were to approach?
I would say I would look favorably, provided they have understood this aspect.
Sure.
And the team is good and they are addressing these aspects. I think then it makes a case for it.
Sure.
In my view, yes, as Vikram said, if there are right metrics in place, one would look at it. But these are not typically favorite of VCs or any kind of funding or private equity. See, in these businesses, typically neither banks want to fund it, nor private equity or VCs want to fund it. So the best way to manage such businesses is you run 2 or 3 parallel businesses and let other 2 businesses fund this one. Even this business which was funded, it was funded by their main business, and this was the additional business they got into. So these are businesses with deep pockets, a long gestation period. So keep that in mind.
Sure.
Don't make it the only source of your income, and that's what will protect you and make you survive in longer run.
Okay, so Venkatesh, that's some very important advice for you. Don't make this your only source of income. Don't make this your only business. Look at how you can diversify your risk, your portfolio, your products, etc. Time for a break, but our experts will continue answering your questions on the other side. Do stay tuned. You're with us here on Leaders of Tomorrow, and tonight our experts continue to answer all the questions that you, the viewer, have sent us. Do take a look. Prakash, Vikram, thank you both very much for being here tonight. We've got a whole bunch of questions coming in, so let's dive right in and take our first query that's coming in tonight. And this is a call that's coming to us from the line of Rajkumar Vijay. Go ahead, Rajkumar, what's your question?
We are microfinance and NBFC company situated at Jaipur and rated as BBB- by CARE. We are facing problems to get skilled manpower. Other than this, we also face technology issues, which is high cost. We are also facing issues with regards to management information services like MIS. So need a solution on this.
He's saying based in Jaipur and therefore is finding it hard to get the kind of skilled manpower. I mean, get this quite often where people say based in tier 2, tier 3, etc., and not getting access to the kind of manpower that they require for their skilled industries. And he's a microfinance as well as an NBFC. And then he's talking about the cost of technology, including having maybe an MIS. Could I come to you on that, Prakash, first?
Sure. So I'll take all the 3 questions in sequence. First one is on skilled manpower. I understand in tier 2 and tier 3 cities, the skilled manpower is not available. What you could do is, you can use the expertise which is available in that market, and for the other expertise, which is very high level expertise, use consultants who are based in large cities. These days the options of people giving you advice or consulting on phone, email is pretty much prevalent, and consultants can travel once a month or once in a quarter to to help you. So a mix of whatever is available in tier 2 and tier 3 cities and some consulting from large metro cities consultant can work. In terms of the second question, which is you face technology issues. For example, you want to do good MIS for your company, and we expertise as a virtual CFO, a lot of expertise in MIS. What you could do is to make your MIS, rather than investing in ERP or a large package, you can make in Excel and hire a lot of experts like us. In virtual CFO, we make MIS in Excel at a very affordable cost. We make it for a small or medium sized company. So you can hire a similar company who can give you service from large cities to small cities and save cost and still get the quality.
Sure. All right. Would you have anything to add, Vikram?
Then in terms of the actual technology that they need, especially in their business, which is, they would need to acquire customers, they will need to service them, they will need to do credit rating of these customers and also the recovery of loans. For that, it's quite interesting, this, the entire fintech wave in India has started very recently, and quite a few startups have actually started offering good technologies and good use of artificial intelligence, data mining, machine learning, which is actually able to do a lot of this, and some of these companies also started offering their technologies to players like these. So rather than having to invest to build their own technology, they could actually partner with one of these startups and use their technology to actually run their business. So I would say they just need to find out some of these startups and work with them.
All right. So Rajkumar, one of the pieces of advice for you tonight, of course, is to use technology to solve all of the problems that you have, including your manpower problems and, of course, the costs that are associated with using the technology. Let's take our next query, and this one is coming to us on Twitter. Anand Pincha has tweeted at us. You can tweet at me, Sunanda_J, or our official Twitter handle, LOT_ET now, with your questions, and our experts will take them up for you. Anand says diamond tools are mainly used in cutting, grinding and polishing stones. He says basically diamond tools made with the powder metallurgy, so it's very technical in nature and needs good and different formulations which varies with every stone. The Indian diamonds tools industry, he says, is very small, in which China's share is about 60%. In India, due to the lack of powder metallurgy experts in labs, he says proper formulation is a big challenge. Before GST customs, excise duty and CVD were 28%, but after GST, he says customs is 10% only. So the cost of imported material has fallen, and the Chinese share in the Indian market has started increasing even more rapidly. Cost and quality, he says, is being impacted by these Chinese imports.
They're talking about diamond tools.
Yeah.
And of course, that industry size will be restricted by the number of those B2B players in the market who are actually looking to buy those tools. And the other challenge they're facing is, they have competition. So one is the market is small, and then they have huge competition from the Chinese in this market. So obviously, there's a double whammy for them. In such a situation, I think they have to think of diversification. I think it will be very challenging for them to really continue to compete in that market when your competitor is dropping price. One is diversification. Other is in the same product category, maybe improve their service levels, because what happens is that when you are dealing with this your customers, these kind of products will require servicing levels, and since you are sitting here in India, Chinese will have that restriction in terms of how much they can service their clients. So while the price is low, if you can give a sustained model to your customers to provide better service, your customers will prefer that.
And he's talking about a very specific industry, in the diamond industry. I'm sure even every small percentage makes a difference in terms of the quality of the final diamond. So focusing on the benefits of having superior tools like the ones he has to his customers, perhaps, better marketing essentially is what I'm trying to understand, maybe will help him retain that market share.
Yeah, I guess, in a B2B market, while in this kind of a market where the market is small, even if you're doing marketing, if your competitor is offering the same product at 50% discount, it becomes very difficult to even sustain those marketing costs. So I would say that, you will have to position yourself differently, that you are offering different things, better service, better relationships, and also, as I said earlier, you have to look at diversification in other areas.
Sure. All right, that's in response to your question, Anand, and all the very best to you in your business. One of the recommendations, of course, is that possibly not just look at B2B, but also B2C, and step up your marketing efforts to talk about the quality of your own products. Out of time on Leaders of Tomorrow. If you have any questions for our experts across any aspect of your business, here's how you can reach us. leadersoftomorrow@timesgroup.com is our email ID. On social media, tweet at me personally at Sunanda_J or LOT_ET now. You can also leave your feedback, comments, questions for us on our Facebook page. Leaders of Tomorrow on ET Now is our Facebook page. We love hearing from you. Do keep your questions coming in. Thanks for watching. Have a good night.